Hello, hi, and welcome to another market update from 14th to 18th of October 2024. So let's start with the world economy. So in this edition, we'll be discussing about China and ECB. The Chinese Custom Office reported on Monday that the exports have risen by 2.4% in the dollar terms from a year earlier, but this was lower down from the last month's growth of 8.7% in the month of August. The imports rose by 0.3% in the month of September. The Chinese economy, that is, they came out with their GDP number, which has expanded by 4.6% in the third quarter from a year earlier. News coming in from ECB, that is European Central Bank, had cut interest rates again on Thursday. They reduced this rate by a quarter point. So now the ECB's benchmark deposit rate sits at 3.25% following the latest rate cuts. We now move to the US 10-year Treasury bond yields. The 10-year Treasury bond yields remain elevated above 4% level and closed at close to 4.0332, which hardening the yields for the again for the last week. The oil, in a surprise move, came down by 7.13% to trade at $73.17 a barrel. There has been news that the oil exporting the OPEC countries had estimated that the oil demand in the next 1 year would be down because of the lower demand from the China and the world economy slowdown. If you look at the gold prices, 24 karat gold traded in at the rate of 6,325 per 10 grams, which was up by 0.18%. So the gold has been following an uptrend, which you can see from this graph. So it's currently at 76,324. US dollar index closed in this week at 103.140. It has been again in an uptrend trajectory, closing close to 103 in the. Now we move to how the world market has performed during this week. In the last week, the markets were almost flattish. The US market was up definitely by 1%, close to 1%. There has been the growth has been factored by three possibilities: the lower rate cuts, the earnings season is coming out good for the US companies, and there's a lot of movement that is happening in the US market. The European market was also up in the last week, where it was up by close to 1.5%. Whereas on the contrary, Asian markets were in a mixed mood. The Shanghai component and the Hang Seng showed a diverging place, where the Shanghai component was up by 1.36%. The Hang Seng was down by 1.3%. The Taiwan was up by 2.56%. Whereas the GIFT Nifty, the Indian market, was down by 1.80%. If we move to look at the weekly FII and DII activity for the week, the FIIs again for this week was the net seller at 21,823 crores worth of Indian equity, whereas DII bought close to 16,384 crore worth of Indian equity. With this week, the FIIs have become a very big seller for the Indian equities, clocking around 80,000 crore worth of equity has been sold by the FIIs for this month only. Which when we translate it into weekly performances, we saw that the markets remained weak, where they ended almost flattish, whereas the Nifty banks tried to support the Indian market. It was up by 1.8%. Nifty mid cap lost close to 1% in the last week. Nifty small cap was up by 0.36%. So we move on to the valuation. How on the valuation front the market is looking like. If we look at the valuation, the Nifty 50 trailing PE has reached 23.4, nearly 2 years high and below 5 years average. Nifty mid cap 150 trailing PE is at 44, 0.1, nearly to near to 2 years and 5 years high. Nifty small cap trailing P is at 36, close to 2 years, and the just above 5 years high. If we look at the Buffet indicator shows that the markets are modestly overvalued with a ratio of 107.96%. The Indian bond yields moved up a bit, 10-year bond, and closed at 6.922 percentage of yield. The yield curve in the short curve was negative, or was inverted, sorry, and the long and the medium term are just still flattish. So that was all from my side. Hope you enjoyed the video. Do like, share, subscribe to our channel to get weekly updates from us. Thank you.